Ladies and gentlemen, welcome. Today, we're doing our Q3 predictions for SoFi stock. We're going to go through literally everything. So strap in because we're getting straight to the numbers. Very fast video for you guys. Let's deliver it. So, members and everything. I'm actually expecting 740,000 new members for SoFi this quarter. Now, it seems extremely aggressive to me, but I am also basing this slightly off of SoFi's predictions, and we'll talk about that. On top of that, I'm expecting just about 1.1 million new products, which will be a record breaking quarter for SoFi for product count. And I will explain exactly why. Financial services, record breaking 1 million new products. Lending also doing extremely well, not as high as Q2 of 2023, but very, very high indeed. Okay. Technology platform, we are expecting 7.8 million. And now all these numbers where you see like, hey, did Tanner really predict 83,783 lending products exactly? No. Okay. So everything is based off of statistics that I'm making assumptions with, and I have boxed those out in their own separate boxes. So you can see members, I did a prediction on, Galileo accounts, products per member, and then as you go through, you can see because of the squares which assumptions I'm actually making. Okay, everything else is filled in because of formulas that I have in here. But let's go on. So 7.8 million technology accounts. There will need to be a ramp up at the end of the year in order for them to get that 18%, which is what we're hoping for them to do year over year. Okay. And so we do expect some level of ramp up in Q3, an additional account ramp up even further in Q4, but I'll just leave that for a surprise for next quarter. But all that's filled in to get all the annual numbers and everything already. Now, revenue is going to be a little bit different. It's not net revenue. I'm just looking at it and how much they're going to bring in. There's not going to be servicing right adjustments and everything. So lending can be a little bit off from where we normally see it, but I'm just getting sort of the broader things that I can make real assumptions on. Financial services and technology platform will not be adjusted at all. This is, my actual assumptions. So I believe that not net revenue, just revenue will come in at about 650 million. 210 million of that will come from financial services, which is extremely aggressive. Okay. As you can see, quarter over quarter changes will be right back to hitting very, very high numbers, 18.9%, and year over year at 77%. In order to get to that 80% plus mark, which is what SoFi is actually predicting themselves, I had to boost these numbers way higher than I thought would feel comfortable. So if you actually look back at Q1 of 2023 back here, it was $11.36. Now by Q3, we're expecting $17.45. I was even having a conversation with Data Driven Investing, who does not believe as highly in the member counts. He has the average revenue per financial services product being way higher than mine. I think his is closer to $19 to $20, which is still a drastic climb from where we've seen it in previous quarters, even going all the way back from whenever this segment was even first started, right? Back in 2018, 2019. Yeah, tons of assumptions in terms of ramp ups in technology revenue, good amount of lending revenue. This is going to continue to drop a little bit also because of the different diversification between different lending products as well. But that is still very, very healthy. It's going to be a great quarter for lending because we're not actually seeing that drawdown in lending revenue like they had originally suspected back in 2023. They said by 2024, there would probably be 5% less revenue than there was in previous 2023. And now we're actually seeing, no, that probably won't happen. There probably will be still a very, very tiny increase in lending year over year. I put it at about 2% or so. Now, for contribution profit, we have the same amazing statistics coming in. I think that we're going to have the highest contribution margin across the entire company with improvements in financial services, lending, and technology platform. Now, it is not the highest margin that we've ever seen for technology platform or for lending. We've definitely seen some higher numbers, but for financial services, it will be by far the best, in my opinion, placing that at 33% to a total of $313.3 million earned, okay, for contribution profit. Once we actually make some EBITDA adjustments and everything, you can see that adjusted EBITDA will come in at about $172 million is my expectation, or 26.5% margin. And net income, I also have coming in above expectations at nearly $50 million, or a 7.7% net income margin. For the EPS lovers out there, that'll probably equate to about 5 cents of EPS whenever you divide it by the amount of diluted or total diluted share count. Okay, so this is how I'm deriving all of these numbers. It's not just me guessing. Well, I mean, there is definitely a lot of assumptions and guessing baked into it. But to go a little bit deeper and to try to understand these numbers, we had to balance out every single product count and number. Right. So if I expect, personal loans or lending to do amazingly with all of these new originations that they might be bringing in, well, this could throw off financial services. So having a balance across every single product that would make sense for SoFi is also how we're going to derive accurate numbers for, how much revenue they're going to bring in or what those margins are. So this is the product predictions that I'm assuming. Like I said, 1.1 million new products. Lending products are going to be just a little bit above what it was last quarter at 83,783. And financial services products is going to break a new record of just over 1 million new financial services products. We'll talk about why that's going to be the case. Personal loans are going to do amazing. I'm expecting about 4.4 billion of personal loan originations, doing better on an origination per loan, which is my actual assumption. And then the percentage of new products is how I get my total count here of 71,188. Okay. Home loans also, we're going to see a ramp up even from Q2, which was a ramp up from Q1. But in Q3, it's going to be even higher. My expectation is about 1,650 new home loans, or about nearly 500 million of originations for Q3. Student loans originations coming in at 766 million. It's still not going to be as high as people suspect, but I think that will ramp up in Q4. SoFi Money is going to do exceptional, 466,000 new SoFi Money users. Total deposits also going to go up to about 24.8 billion. Okay. The quarters between Q1 and Q2 were a little bit weird because those time deposit fall offs, which was the CDs that they were actually giving out. This quarter, I think a lot of that has been alleviated, and we're just going to see total member growth plus direct deposit growth. We're going to get back close to that 3 billion of new deposits per quarter added. So that's really where I'm deriving that number from. SoFi Invest, no more negative numbers. We're going to get back into the positive numbers. I think maybe some of these negatives were also pushed into Q2 of 2024. So that I think is completely gone now that we have positive numbers, and we're going to see another ramp here. That's going to be bringing in about 11.8% of all new products. That's really what's going to be deriving a much higher financial services product count and leaning more towards, financial services products versus lending. Credit cards. See, this is probably the one that I am super different than any other SoFi, creator, commentator, whatever. I do think that there will be a slight ramp up in credit cards, even though it looks like what we're seeing is a drawback on this initial card. This number is not going to be any of the new cards that they just put out. It's only going to be the old ones, but still, I have they said that second half was going to be like the last 6 months was going to be all about their credit card. I can't imagine that it is all put onto Q4 and none of that is in Q3. So I am seeing a ramp up here, but nothing like what we used to see in the 20,000s of new credit cards. So slower than usual, but a ramp up versus what we've saw in these last 3 quarters. SoFi's referred loans, whenever we can't get a loan out to other people, okay, we don't want to give them a loan, we might actually send that somewhere else. I think that this is going to be a massive ramp up. Rate cuts is going to spell great news for referred loans because it leaves a larger spread for capped interest rates, because that's at 36%. If your cost of funding goes down, it means that there will be a bigger spread, more availability for referred loans going out. I'm expecting roughly about 9,000 new referred loans. SoFi Insights going to see a good quarter, 383,000, making up for about 35% of total new products Very excited for the referred loan thing. This is how we're going to ramp up originations in the future, is seeing what people have at other financial institutions and offering them ways out or better financial products to potentially get their money right. SoFi Insights or SoFi Relay is the answer there. SoFi at Work, this one's the hardest to judge, sort of just placing it at where it's been in previous quarters, roughly about 8,000, 8.7 thousand, depending on, similar aspects of what we're seeing with student loans. I expect we're going to see with SoFi at Work, which is essentially just a B2B student loan offering. But those are all my expectations for products, which then lead me to all my expectations for finances for this specific quarter. If you're to ask me what this translates to on a full annual basis, what we're going to see is this. In my opinion, revenue is going to increase by 23.5% year over year. Financial services will just break through that 80% mark, which was so hard to model. Every single one of my numbers seems incredibly high. Credit cards seem high, insights seem high, SoFi Money seems high. The amount of average revenue per user on those products seem high, and yet I'm just breaking that 80% mark, which they said 80 plus is what's going to happen. So hopefully. Lending revenue, I do not think will be negative. I think that's going to increase. Technology platform, I have beating their expectations, just over 18%. And EBITDA is going to come in over 48.5%. And net income, we're going to see a massive, massive swing from negative 50 million to positive 207 million by full year of 2024. But ladies and gentlemen, that's the content. If you guys like this sort of video and want to support it, make sure you check out the sponsors like Moomoo. You can go to futureinvesting.pro/Moomoo, and with a qualified deposit, you can gain up to 15 free stocks whenever you sign up and actually get access to their mobile app and even their desktop dashboard. I've got a full review of Moomoo coming out soon, and I hope that you guys will like that as well. But until next time, bye for now.